Now we will understand the difference between services and goods. First point is intangibility. Services cannot be touched because they do not have physical existence. Whereas in the case of goods, they can be touched as they have physical existence. We have before us pen drive. It is a good, we can touch it because it has physical existence. Next point is inconsistency. Different customers have different demands and expectations. If we go to a chartered accountant, we will tell him our own needs. The other customer may come to him with his own requirements. So different customers have different demands and expectations. In the case of goods, goods are produced with a high degree of standardization. If we go to the market to buy a pen drive of the same brand, we will find that all the pen drives of the same model of the same make manufacturer are of similar type. They are manufactured with a high degree of standardization. Next is inseparability. Services cannot be produced now for consumption at later date. For example, the doctor has to provide his services only when a client or a patient comes to him. Whereas in the case of goods, separation of production and consumption is possible. A pen drive or a TV may be manufactured in some other country or in some part of the country and may be sold in another part of the country. Inventory. We cannot keep the services in stock. For example, unoccupied seats in airlines, theatre or hotels cannot be kept in stock to be used or to be provided to the customers as and when demand comes. Next is goods cannot goods can be kept in stock. We can keep TV, mobile phones or pen drives etc. in stock. Next is involvement. Customers participate in the production. Whenever we approach an advocate or chartered accountant or company secretary, we tell him our need and according to our requirement he will guide us. So we participate in the production or in so that he may advise us accordingly. Whereas in the case of goods, we do not participate in production. Whether we have participated in the production of this pen drive, no, we have simply went to the shopkeeper to buy the product. Next is nature. Services is an activity or a process. For example, watching a movie in a cinema hall. In the case of goods, it is a physical object. For example, table, chair, fan. Type heterogeneous. In the case of goods, these are homogeneous of the same type. All the products are homogeneous. Ownership. There is no transfer of ownership in the case of services. But if we go to the market to purchase a goods and make the payment to the shopkeeper, then the transfer of ownership happens. Next, types of services. First is business services, then social services, and other are personal services. We will discuss it one by one. Services can be classified into three broad categories: business services, social services, and personal services. Business services are those services which are used by the business enterprises for the conduct of their activities. If you are a businessman, you are using the banks for performing various activities like taking loan or depositing your cash. We may be availing the services of insurance to insure our employees or to insure our shop or our stock. We use the transportation services to get the products transported from the wholesaler to our shop or to send the products to the client's destination. We use the warehousing to store our products. We use the communication services to communicate with the wholesaler or our clients. Next are social services. Social services are those services that are generally provided voluntarily, keeping in mind certain social goals. What are social goals? They may be to improve the standard of living of weaker sections of the society, or our social goal may be to provide educational services to the poor children. Organizing free health camp is also a social service. The social services may be provided by individuals, private and independent organizations, or by some government agency. Then comes the question, what are the personal services? Personal services are those services that will depend upon the customer's preferences and demands. The personal services cannot be consistent in nature. They will also offer depending upon the service provider. For example, tourism, recreational services, and restaurants. Now, the topic before us is banking. All of us use the services of the banks. So, banking means the business conducted or the services offered by a bank. Banking offers services, banking offers savings, loans, and investment products and services to individuals and businesses. What is a bank? Bank is a financial institution which has been granted license by the competent authority or a regulator to receive the deposits and give loans. Banks may also provide financial services such as wealth management, currency exchange, and safe deposit boxes, which are also known as lockers. In most countries, banks are regulated by the national government or by the central bank of the country. The bank lends the money you deposit at the bank to others in the shape of vehicle loans, credit cards, housing loans, personal loans, and other loans. How the bank earns profit? Just like other businesses, the goal of the bank is to earn profit for its owners or its shareholders. For most banks, the owners are shareholders. Banks earn profit by charging more interest on the loans than what they pay to the people for their deposits. For example, a bank that pays 3% rate of interest on savings account, and it may charge 7% rate of interest for the loans. So it earns a gross profit of 4% for its owners. Now, banks can be classified into the following. First is central bank, commercial banks, cooperative banks, and specialized banks. First comes the central bank. What is the role of the central bank? Central bank of any country supervises, controls, and regulates the activities of all the commercial banks of that country. It controls and coordinates currency and credit policies of any country. In India, Reserve Bank of India is the central bank. The central bank typically acts as the lender of the last resort to banks and other eligible institutions that no longer have other available means for borrowing and whose failure to obtain credit would dramatically affect the economy. We will give some example. In the case of Yes Bank in India, a few years back, Yes Bank had suffered a lot because nobody was ready to provide him loan to run its operations because its non-performing assets had increased many a times. In this that situation, the Reserve Bank of India and the Finance Ministry had formulated a plan, and they bailed out the Yes Bank by in which the State Bank and other banks provided money to the Yes Bank, and today Yes Bank is performing very well. It is not that the central bank will bail out each and every bank. The central bank or the reserve bank or any central bank of any country will perform its role of lender of last resort on case to case basis. Next is commercial banks. A commercial bank is a financial institution which accepts deposits from the public and gives loans for the purpose of consumption and investment. Commercial banks also provide safe deposit boxes to customers and also provide various types of cards such as credit card, debit cards. In India, the commercial banks are governed by Indian Banking Regulation Act 1949. There are two types of commercial banks: public sector banks and private sector banks. Public sector banks are those banks in which the government has a major stake. Public sector banks usually have to emphasize on social objective than on profitability. On the other hand, private sector banks are those banks which are owned, managed, and controlled by private promoters, and they are free to operate as per market forces. However, private and public, those type of banks are regulated by Reserve Bank of India in India. There are a number of public sector banks like State Bank of India, Punjab National Bank, Bank of Baroda, etc. The examples of private banks in India are HDFC Bank, ICICI Bank, Kotak Mahindra Bank, IDFC First Bank, etc. Next are cooperative banks. A cooperative bank is a small sized financial entity where its members are the owners and the customers of the bank. They are registered under the Cooperative Societies Act. They are governed under the Banking Regulation Act 1949 and banking laws applicable to Cooperative Societies Act 1965. As the name suggests, they are formed on cooperative basis. They are meant essentially for providing cheap credit to its customers, to its members. Cooperative banks serve an important role in the Indian economy, especially in rural areas, that is, agricultural financing. They also provide loans and other services to non members. In urban areas, also, they serve mainly to small industry and self employed workers. Now, there are other type of banks which are known as specialized banks. They are created for special purposes, for example, development banks, export import bank, regional rural banks. These banks provide financial aid to industries, heavy, turnkey projects, and foreign trade. Thanks for watching. If you like our course, please spare some time to give a star rating to our course.